Good morning, traders from Chicago. It's 8:01 Central Time um, on Tuesday, the 10th of February, 2015. A lot going on this morning. Um, Derivatives trading involves substantial risk of loss and is not suitable for all investors. My personal opinions, market data, and recommendations subject to change without notice. Past performance is not indicative of future results. News overnight, some really key stuff. The deflation theme is gaining momentum on several fronts. China's inflation data moving towards the brink of a deflationary spiral. This is according to Trade the News. January CPI in China registers at its lowest reading since November 2009, year on year at 0.8% versus 1% consensus. PPI falls for the 35th straight month, largest decline in 5 years, negative 4.3% versus negative 3.8% expected. Denmark's January headline year-on-year CPI turns negative for the first time in over 50 years. Last was back in 1954. Again, Denmark's January CPI turns down negative for the first time in 50 years. Risks of negative headlines remain regarding Greece over the coming days as Eurogroup and EU leaders gather to discuss the situation. The Eurogroup meeting on Greece is expected tomorrow. The EU Commission was said to propose a compromise plan for Greece this morning. That came out during the European session, caused a little pop, and then it was later denied. So the proposal was for a 6-month extension of for the country's bailout program. Again, that was denied. Let's see, it looks like it's denied at 6:55. The original news came out at 6:06 Central. Again, denied at 6:55. The EU is saying that the earlier reports are untrue and talks remain intense. It's been my experience that when a rumor is denied, we find out that it was true a little bit later in the day. So look out for that. Looking ahead today, at 9 o'clock Central, 10 Eastern, we have February's IBD tip economic optimism, expecting 51.9. And also at the same time, we're looking for December's wholesale inventories month on month, expecting 0.1. Wholesale trade sales, expecting negative 0.3. And then we have the JOLTS job openings also at 9 Central, half hour after the open, 4.99 million estimated. And then from there, we have Treasury 4-week bill auction at 10:30. And then at 11, we have DOE short-term crude outlook. Also at 11, DOE short-term nat gas outlook. And then at 11, also the crop report, the USDA World Agricultural Supply and Demand estimates. And then at 11:45, we have Fed's Lacker to speak on the economy in Raleigh, North Carolina. At noon, we have a Treasury auction for 3-year notes at $24 billion. And then that's really it for the day. It's a pretty busy day release-wise. Tomorrow we have, of course, crude oil, Fed's Fisher, and the ECB's Kerr speaking. Let's switch gears now to the charts. Show me the charts. The charts are saying, sound like a card reader. Yesterday's expectation was for responsive buying. So the expectation yesterday when we did the trader bite was the market was opening out of range. The expectation was for responsive buying early up to 2050 and expecting the market to put a lid on, sellers to put a lid on it, and for it to push lower, expected 2040 to be taken out. And if 2040 is taken out with vigor, then it could extend, as I've spoken about, it could extend as far down as 2029 and 2028, that wide volume node. And it's exactly what we got. We got hypo 1 yesterday, in that we got response that we opened right at the low of Friday, and we got responsive buying initially to 47.50 for a pullback to 43.75, a break higher to 49.25, a higher low pullback inside of the day's range. Close the point of control here at 2050, this pink line. This is the most traded price. We have a triple distribution from Friday with a neckline at 51.25. We went to 51.50, came all the way back down to the IB low. That's the first hour's low. So we have a double IB low. This is when I was on daytradingradio.com, and I had suggested that even, one of the levels that I'd shared with them for the week was 42.25. 42.25 was the IB, was the OS low, but that's not where it came from. And we ended up tapping it twice and breaking higher. We had a one-tick failed auction at the IB high. Beautiful setup here. Took out the 51.50 by one tick with an IB low, double IB low stat in place. The statistic, and again, past performance not indicative of future results. A double IB low, the stat for double IB low remaining unbroken to the end of the session is approximately 17%. This is an old study, so do your own homework. So the expectation was for this to be broken, for this 42.25 to be broken in the session with an 83% probability. So we had a one tick failed auction on the high. This whole move up was not fun, but still we had this setup waiting, and we finally did a one tick failed auction test. The market tried to go a tick higher, did not trade much at all. We can see what it traded on the high here. 632 contracts triggered on the new high, and then sellers stepped in to take it all the way down and through to the 2040. Just very, very textbook type trading, not easy at all. We got the chop that I had talked about during the Trader Bite. Again, the goal here is not to say, look at me, I'm right. The goal is to say, here's the key plan for the day. Here are the expectations, and then to watch as the market confirms or denies them. And then the goal for us as traders is to take a position according to that plan. And my intent in repeating what has happened and saying it did what I expected is to say that that particular plan took place and why. So that's what these Trader Bites are for. So don't take it as me saying, look at me, I know there are a lot of people who toot their own horns in the business, and I don't intend to be one of them. So there's the process continuing. We continue to trade from the October 31st balance, and we are stuck up here and sideways. This profile is getting built beautifully. You don't often get a composite balance that is so even and so well distributed in the middle. Generally, it's skewed. So if you go back in history and look at the large balance zones that we've traded in the past, you get over time, before it breaks, you get it balancing nicely. Before that, it tends to be skewed to one side or another. But you can see here, this is balanced nicely. This is kind of odd shaped before it broke out. This is odd shaped, but has a lot of kurtosis in the middle, a lot of strengthening in the middle there. And this is the largest one by far. We haven't had 3 months of balance in a while, 3.5 months of balance in a while. So we've been stuck in the 1963 to 2088 zone for quite some time, and we're likely to break away from this. In a big picture view, when you break this down into a big picture view, I don't have enough data here, but you'll see that this is pretty much a flag. This is a typical consolidation for a break. So we're still waiting on that break. The key elements in play still, 2060. Again, 2060s carried over from the high balance of the 2072 all-time high before we pulled back and went to 2088.75. 2060 has been in play all along. You can see it on the composite here, a very evident protrusion of volume on the composite. This is the highest balance zone before we start trekking into before we start moving into, oops, let's move this back, before we start moving into the 2072 MCLVN, which then has us working the 7750, and then the last line of defense since the high is 81.75. So it's actually 72.25, 75 and a quarter, 75.75 actually. And then from there, I expect new highs. So we're within a stone's throw of getting that done. Especially today, we've recovered from this small pullback, and we're back inside the range. So we're building a local, what looks like a local small composite here. You can see it here. Balance is right here at 2050 below, and we're above it, working our way up and through. Looks like 62.75 is a low volume node over the last 3 days, and we're trading 2055. So for today, I expect the primary idea, trade idea, is I'm expecting a responsive selling again towards yesterday's range. We opened below Friday, yesterday, and now we're opening above yesterday's range, expecting responsive selling back into the 53.75 and potentially testing 51.75, 51.50, or 2050. Before I expect buyers to step back in and start pushing through the overnight high towards the 2060 again and over to the other side. So today, sellers early, likely for a push lower to invite buyers in. Prices become advantageous to buyers in the 2050 zone or so, and then we're likely to start pushing back up and taking the overnight high. The alternative, Hypo 2, is that we open and we make a push for 2059 immediately, in which case we would probably find resistance in the 2060 area and start moving lower, which means that once we move lower and into yesterday's range, we're likely to go deep into yesterday's range. That's Hypo 2. Hypo 3 is that we open auction out of range, go sideways, make a very small attempt lower, and then take off and go to the upside, at which point I expect us to go pretty far, take out the 2068 for today, and start working towards that 2072 and 2075 as targets. Hope you got that. But that's really what I'm looking for today. Here's the Euro stocks again. Yesterday, nothing but balance again. It's beautiful, isn't it? It's just, we just keep repeating this balance pattern since the end of January, and we're back up through the point of control that was here earlier. Oh, yep, that was here, 33.65, and on to the other side. This is another market that's also in balance. You can see this morning we took out the point of control, the naked point of control at 3,400 by 4 ticks. Pulled back pretty decent. We have a double distribution profile in the Euro stocks. It is trading beautifully. If you pull up that that market, you'll see that it looks very much like the S&P 500, except it's cheaper to trade. Just be cautious trading this market because you are trading European markets. You need to make sure you have a really good news feed and so on. I'm working on a deal for a news feed with Trade the News, trying to get it for a discount for followers. So sit tight before you make any decisions on subscribing to a news feed if you plan on trading, especially global markets like crude oil, Euro stocks, and so on, that trade before the U.S. opens, where once the U.S. opens, you have some fairly reasonable feeds to, including CNBC, if you call that useful news. But sit tight before you subscribe to any news feeds. We might have a deal for you soon. Anyway, that uses up my time. I'm not going to cover crude. Crude's just sitting. I expected crude to pull back yesterday to attempt to push higher and then to pull back lower today. So I'm looking for crude to drop back down into the 50-50 area. down to 49.97 for a retest of that composite LVN, but we'll see what happens this morning. Good luck today. There's a webinar going on at noon Central. We're going to do part 2 of the order flow discussion with Peter Davis, and that's at noon. If you're an S5 trader, you've received the invitation in the email. If not, it's on Twitter. I have the link up. I posted it this morning. Hope to see you there. Have a good day, and I'll talk to you soon. Bye.